Dr. Babasaheb Ambedkar Open University.
Hello, dear friends. Welcome again in the course of a Fundamental of Financial Accounting. As we already discussed two modules in this particular program. The first module was the introduction of accounting. What are the introductions, how the accounting is actually comes into the picture, what are the objectives, characteristics and other things we were discussed. In the second module, we were discussing actually the terminologies of accounting, important terminologies like what is capital, what is drawings, what are creditors and debtors, different kind of assets, liabilities and other things. So now in this particular unit, we are going to discuss about the how this chapters is actually moving, and here that part of the key takeaways of this unit, that is the concept of bookkeeping and accounting. So where the concept of bookkeeping and accounting and accountancy, which are the points we are going to discuss in this particular unit. Here the bookkeeping and accounting definitions, then the objectives of bookkeeping, then the differences between the accounting and accountancy. Then we are going to discuss the branches of accounting, different kind of accounting branches. Then we will discuss users of accounting informations, who are the main stakeholders or who are the main important persons are actually involved and that they are actually looking for the accounting. Then advantages of accounting, and last topic is limitations of accounting. So these are the topics which we are going to discuss in this module. Let's begin with the first, bookkeeping and accounting. So what is bookkeeping all about? The bookkeeping is all about that it is an art of recording transactions in the books of account which are having a monetary valuation or monetary conversion. So those transactions which are having a monetary values are recorded in the books of accounts. It is called a bookkeeping. So it means that we need to identify the transactions which are having a monetary values, so that those transactions which are actually converted or measuring in the monetary values, we have to identify those transactions, and then these transactions has to be recorded in the specific books of accounts in the specific format, which are actually classifying in the next stage and recorded in the ledger books. So this is all about the recording of transactions in the books of accounts. The transactions will recorded in one book, or it will be recorded in the multiple book. So that depends upon if the transactions are many, it might divided into a different books, like a purchase book or a sales book or a bank book or a cash book or etc. and etc. So ultimately the need to identify the transactions which identified on the basis of a measurement in the value which has been converted into the monetary terms and that recorded in the different books of accounts. And also after the recording the books of accounts, then we'll have to identify the balances and recorded in the specific balance, a trial balance. So ultimately till the recording of the books of accounts, it's considered a bookkeeping. Now we need to try to understand what is accounting. Accounting is actually starts when the bookkeeping ends. So ultimately till the accounting transactions recorded in the books of accounts and find out the ledger balances, this is what all about the bookkeeping. And after the end of bookkeeping, accounting it starts. So now there are three important terms is required to understand the accounting definition. The transactions which are recorded already in the books of account need to summarize it, analyze it and communicating to the people who are stakeholders or who are important to see these accounts. So ultimately need to identify the summarizing of all these transactions. How you can summarize? They prepare a trial balance and all the trial balances to be recorded in the financial statements like profit and loss account and balance it. It is called a summarizing. Then it has to be analyzed properly and interpreted. Analyzing and interpretation in such a way that the accounts of informations will be helpful to the people who are actually taking a decision or maybe preparing a budgetary planning or maybe taking a decision for the future planning. That is called the analyzing and some interpretation of this account. And the communicating to whom? The communicating to the bank, communicating to the government, communicating to the people who are lending the money to your firm. So these are the people who are actually stakeholders, various stakeholders who needs to get these informations for all this accounting information. So ultimately, summarizing, analyzing, and communicating to the people, this is all about accounting. Moving to the next part is the ultimately objectives of a bookkeeping. Which are the objectives of bookkeeping? Objective number one, to keep a permanent record of a transactions. As we already discussed in the first two modules also, that any kind of monetary transactions need to be identified, and that has to be recorded in the books of accounts. Why? Because of there are many transactions when you are doing a business. All the transactions cannot be memorized. So ultimately it has to be recorded somewhere to analyze the transactions for the future prospects of the business. So first is to keep a permanent record of all transactions. The transactions which are actually having a monetary value. So that is the first objective. Objective number two is to ascertain the profit and loss. So once you are recording all these transactions in the books of accounts, automatically then you will get the information of whether you are earning a profit or a gain, or maybe at the end of the particular time you are earning a loss, or maybe your actually losses, and maybe the amount of expenses are more than the revenue. So that means the company is not exactly in a positive way it's run, but it is actually suffering a losses. So how the profit and loss is earned at the end of the specific period, that is again another main objective. Moving to the next part is to know the financial position of the business at a certain period of intervals, maybe on the basis of quarterly or a half yearly, or depend upon your accounting year has been decided on a specific period. The promoters or the owners or maybe the partners willing to know that at the specific interval what is the position of your business at the end of specific period, whether you are earning a profit or loss, or maybe you are having a more expenses or less expenses, or the revenues is actually doing as up to a certain level or not, or maybe how much amount of assets you carried, how much amount of capital investment by you, the amount of capital which you actually brought into the business. From the capital, how much amount invested in the fixed assets, how much you are carried for a working capital, how much liabilities you carry, whether your liabilities are enough to pay, and do you have enough amount of assets or wealth to pay all the liabilities. So all these financial positions you will able to know at certain period of time. That is also the important objectives of the business. Another important objective is to provide the informations for a decision making. So as I mentioned, the definition of accounting and accountancy, you must be understand that the bookkeeping and accounting, it's a difference. The accounting is actually a summarizing also. After the summarizing, you will get the interpretation also. Here, the interpretation is very important because of the once you record the books of accounts, once you summarize the accounts, then you need to interpret it also. Why you want to interpretation? Because of certain amount of things which you will need to help for a future planning, future decisions also. Suppose if you are actually having a less amount of liquidity to run your business smoothly, then certain period of time when you buying stocks or buying a raw material from the vendors, right? At that point of time, you might not have enough liquidity. Then you bought a goods on a credit basis. When you bought a goods on a credit basis, you might not get enough discounts, or you might not getting enough amount of the payment feasibilities. Not only that, simultaneously addition to that, you might actually spending more money at the time of purchasing a goods on credit. So this is the way that your cost of expenditure or cost of raw material is increasing. Once your cost of raw material is increasing, automatically your output of the products or a cost of the product is also increasing. If your cost of product is increasing, automatically it impacts on your profitability. Your profitability will go down. So this is the way you can take a decision, that the amount analysis of accounts, when you already having an accounts and summarizing an accounts, then you start interpretation. Why you interpreted? Interpretation for taking a future decision. So ultimately, the one of the objective is to take a decision making also, it helps. Next is to detect errors and frauds. See, when you are writing all accounts and all the economic transactions records systematically in the books of accounts, if any transactions which are not recorded or missed out, when you are actually analyzing and when you compared with all these transactions with your vouchers and bills, automatically you will identify that any particular bills and vouchers are not recorded in the books of accounts. you will get an idea. So you can avoid your errors, or maybe the people who are actually doing mischief, or maybe the people who does not have enough knowledge also to record the transactions, and by mistake also if they are doing any kind of errors also can be identified if it records systematically in the books of accounts. So it avoids errors and frauds also. Then the another is to meet legal requirement. All the legal requirements, like all accounts has to be recorded systematically. Certain norms has been prepared by the government, or maybe as per the income tax rule, or may as per the legal requirement, or maybe when you are actually borrowing some amount from the banks and financial institutions, also needs to submit your accounts as per the requirement. So all these legal assumptions or legal requirements you can match when you are preparing all these accounts. So ultimately, as per the legal requirements, also you can fill it out. The next is to facilitate comparisons on planning also. Once you prepare your accounts and records your transactions in the books, automatically you can compare your current year accounts with the past year's records and past year data. You can compare it, and you can, according to the comparisons, you can find out some outputs, and according to the outputs, you can take a further planning also. So suppose if you provide a budget of some amount at last year, and the current year you provide more budget, so when you compare it, you can easily take a decision that the last year budget amount and current year budget amount were not enough. So we need a further more budget to be provided for a working capital, or maybe provide some more budget for meeting a regular expenses. So ultimately, these decisions can be taken through the comparisons and planning. So these are the objectives of a bookkeeping. Moving to the next point, that is the differences between accounting and accountancy. As we discussed, accounting is all about actually summarizing, classifying, recording, and all these transactions, right? So what about accountancy? Accountancy is actually starts with writing an accounts in the books of accounts. Along with that, it has been actually classifying also, summarizing also, and all these transactions recording in the books of account. So once you recorded the transactions in the books of account, that is the bookkeeping, then it has to be actually summarizing, then recording and interpretation of all accounts. It is all about accountancy. So accountancy is including along with the accounts. The next is scope. The scope is the accounting objective or accounting meaning is little narrow. It is actually only concerned with the bookkeeping and the part of the transactions recorded in the books of accounts, where accountancy is much wider. Why? Because of its bookkeeping is including in the meaning of accountancy, and when you are actually summarizing an interpretation of accounting for the future planning and future decision, it is all about accountancy. Relation is, it is actually on the basis of bookkeeping. So accounting is on the base of bookkeeping, where accountancy is not only a base of bookkeeping, but the bookkeeping and accounting both are including in accountancy. The function is all about how the results and analysis of the transactions, the financial position can be evaluated through accounting, where accountancy it's including your recording a transactions, when you are summarizing a transactions, and also when you are actually analysis and interpretation of all individual transactions for taking a future decision and future planning is all about accountancy. So these are the relations is also important on the base of individual transactions or on the basis of the whole business and unit so concern. Now moving to the next point, that is the branches of accounting. There are many branches of accounting, and like a financial accounting, cost accounting, management accounting, and so on. So now we'll start one by one. First is financial accounting. Financial accounting is all about to identify the economic transactions, to record the transactions in the book of accounts. Also, it has to be determine the profit and loss through the summarizing of a transactions, and then it has to be understand how the balance sheets and financial statement has to be prepared. So financial accounting is all about to identify the transactions, monetary transactions, records in the books of accounts, summarizing it, prepare the financial statement. This is what all about financial accounting. Moving to the next branch, that is cost accounting. Cost accounting is all about to understand the cost of a product or cost of services. When you are actually providing services or manufacturing a product, the owner or the person who is running a business willing to understand and willing to know that what would be the cost when they are manufacturing a product and providing a services. To ascertain the certain amount of cost or ascertain the product of cost, this system and this accounting will help you. So cost of accounting is to understand the cost and to ascertain the cost of a product and services. Then the next is management accounting. Management accounting, it actually starts after the financial statement is prepared. So once the financial accounting, as per the financial accounting, when financial statement is prepared, then the management accounting it starts. Though management accounting, it requires the basic information of financial statements and the analysis of financial statement in such a way to understand the financial position of the business and how this actually financial position can be strengthened and effective in the coming year to take a decision by the management people. This management accounting methods will help you. So management accounting is all about to understand the financial statements and to take a planning and decision for the future prospects. It's all about a management accounting. Moving to the next is tax accounting. Tax accounting is all about the determining of the different kind of tax, like an income tax or maybe a VAT or a GST or a professional tax or etc. and etc. Any kind of taxes and evaluations can be identified through the tax accounting. Next is social responsibility accounting. Social responsibility is all about to identify your responsibility towards the society, towards the nations, right? So it needs to be measured and it has to be communicated to the across the business community or business requirements, and what amount of contribution has been given by the business to the society. Through this, then identify the responsibilities, and this is what all about the social responsibility account, whether it is actually a responsibility towards the society or maybe towards the employees or maybe third party. So this is what all about to understand the responsibility measured by the business in such a way to communicate to the society. This is called the social responsibility accounting. Moving to the next part is human resource accounting. Human resource accounting is ultimately to any kind of a human resource who are skilled to actually capitalize. That is what the human resource accounting. Ultimately, when you are actually bought any human resources in your business or asked to the person to provide a skill in your business, and any expenses to be occurred for spending those skill to be hired, consider as a capital expenditures. This is what all human resource accounting. So instead of this, actually consider a human resource expenses in a as an expense in profit and loss account. If you are capitalize these all expenses, it is considered as a part of human resource accounting. So these are the branches of accounting. Moving to the next part is users of accounting informations. Who are the main users to use such kind of accounting informations in the business? There are two kind of users. One is internal users and then the external users. Let's start with the internal users. Internal users, that means the first is owners. Owners actually willing to know that what amount of cost of the business, how much amount of expenses are actually occurred in the business, how many revenues you are generated, revenues is generated from the business or maybe the any kind of other sources of revenues has been generated or not, at the end of the specific period whether you are actually on a profit or loss. So these are the main things which are actually very much curious by the owners to willing to know. So this is that owners is actually concerned about this. Then the management, if in case of the one there is not the sole proprietorship, maybe a partnership or maybe the company or a private limited firm. So there are more than one persons or maybe the management has been actually identified on behalf of the investors. The all management is also willing to know that the what kind of informations are actually generated through the accounting informations will help them to take a better decisions in the future. So ultimately planning and future decision making, this accounting informations will be helpful. For employees, how much amount of wages actually they will get in the future, what amount of bonus amount they will get in the future, how much amount of additional facilities they will get from the business. As the company is growing, then automatically their employees will also understand that they will increasing their salary will be increasing, their additional informations also they will get, the all other benefits are also getting from the business, and bonus and other extra facilities also getting from the business. So this is what all informations employee perspective they will get from the business. Now we'll move for the external users. External users like creditors and bankers, they are actually willing to understand that whether they already lend money to the business, so their amount of liability will repaid by the company systematically or not, whether the company is having enough amount of assets to meet their liabilities properly or not. So the creditors are willing to know in that perspective. Government is also willing to know that the how much amount of profit they earn, and from the profit how much amount of their tax liability is supposed to pay, so whether they are paying their tax liabilities or not according to this earning of profit. So they wanted to know this information. Investors, those who are investing in the business, they wanted to know that the what amount of dividend they are going to get from the business, whether the business is growing or not, or if in case of any kind of a business is not growing, whether they want to sell off their investments or not. So that kind of things they can take a decision from the accounting information. Regulatory agencies, naturally regulatory agencies, that they wanted to know that this business is running in a systematic way or not, they are following all the guidelines as per the norms or not, they are not doing any activities which are not bound to do it, or as per the law they cannot do it. So that is what they wanted to know. That information also they are getting from this accounting information. And the researchers, they will get the data, financial statement data, or maybe a costing data, or a certain management methods they can use, and the management, through the management methods and technology, they will prepare some statements and getting in all the data to take a further analysis of the investments, or for the perspective of the investments. So this is what all about, to get the information for an internal and external perspective. Moving to the next part is advantages of accounting, how it would advantage for the different people. Here, for the advantages for the management perspective, it will be helpful for the management perspective, because of ultimately the management can take a decisions for a planning, all the kind of planning to how the sales can be increased, how the expenses can be controlled. If the cost of products is higher, then how the cost of product can be reduced, so that can the profitability can be increased. They can take a decision making, the how many people should be hired, if they are paying a labor more. So in case of, they can actually designing a certain amount of labor planning, or maybe the working environment in such a way that the maximum output and maximum capacity utilization can be identified, right? And how the pricing methodology can be decision. So all these things can be decision. Again, controlling that, as I already mentioned, how the cost can be controlled and all. So ultimately, through the management perspective, that planning, decision making and controlling way, it can be helped. So this is the advantage for them. Systematic record, as earlier also we were discussed, the systematic record means all accounting informations which we identified, through it will be find out the measurement in a monetary terms, and then it has to be recorded in systematic books of account. So those transactions which are having a monetary values to be recorded in the books of accounts, and we can identify that whether it was recorded or not. So in case of avoidance of fraud and other things also, through the recording transactions in the books of accounts. So the another thing is the financial informations. Through all this financial information and recording the books of accounts, you can actually preparing some summary, and through the summary you can identify the how much amount of your gross profit, net profit and the divisible profit, and at the end of that the how much value of your business at the end of the position. So this is the way the financial information also you would get it. The legal and operational benefits, all the legal informations, like what kind of the tax payments you have there, the how much amount of actually facilities you are getting from the different kind of business, what are the helping ads is actually providing by the government. And in case of all these things, if you want to earn some other benefits, like if you are actually preparing all these accounts and systematically records all these economic transactions in books, automatically you can show it these accounts to the bankers and to the financial institution to get the other part of financial helps from the different banks and association. So these are the things which is actually helpful through the legal and operational benefits. Ultimately, this is the way to prepare the advantages of accounting. Now moving to the next part is a limitation of accounting. The limitation of accounting is all about when we are actually preparing an all accounts a certain period of time, it's understanding that your exercises and judgment has been actually maybe towards the data which was provided by accounting books. So on the basis of that, maybe when you are charging a depreciation, when you are actually evaluation of stock, and there are certain perception that how much amount of depreciation should be charged, which method is suitable, which way the stock has to be evaluated, whether the stock has to be evaluated on the LIFO method or a FIFO method or a certain method. So these are some judgment, personal judgment, or the judgment which are actually taking by the owner or maybe the group of persons who are actually taking a managerial decisions is maybe biased than the certain assumption. So it is actually a part of a limitation. Then the next is accounting concepts and conventions. Maybe the fixed assets is actually shown as per the cost. So there are certain assumptions, there are certain arguments that why you are recording a fixed assets as per the cost or as per the purchase price, because of after 5 years, 7 years, maybe certain assets valuations may be higher than the actual cost price. Yeah, definitely land, building or certain other assets which are always increasing, plant and machinery or furniture's valuation is always decreasing. So the depreciation is charged. So there is no problem, but certain assets which are actually valued or calculated on a other basis, on a cost price basis, which has increasing continuously, or maybe their values are increasing, but it is never inflated value recorded in the books of account. So this is also because of the concept and convention that it has been always recorded at cost price. So this is also one of the limitation. Incomplete information, maybe sometimes some transactions may be missed out, or maybe when you are actually showing your actual profit and loss, but because of the business were actually closed down, or maybe a certain decisions that some information were actually missed out to record in the books of account. So it might that some information through some missing informations, you will not able to get the right informations through the account. So that is what the incomplete informations through accounting data are not giving you a right direction. It might be possible. Omission of qualitative informations. Qualitative informations, that means when you are actually taking a certain decision, or maybe the labor relations, maybe a strike and other things, maybe you are having a reputations in the society, maybe you are actually dealing with the banks and financial institutions, maybe you have some disputes with the government and all this kind of knowledgeable informations, disclosure kind of informations which are not necessarily required to disclose in the books of accounts. Through the missing these informations, definitely the people who are actually investing or doing a business, or maybe working in the company, might not get all this information, is also a limitation of the business. More limitation like a historical cost, as the financial statement do not reflect the price level changes and assets valuation changes. As I already mentioned, the land and building and other assets are recorded at cost price, also recorded in the historical cost, considered not a revaluation or an appreciation. That's why it might be a limitation of the accounting. It is considered a window dressing. So some some people who might, as earlier also we discussed, that the person who might not having a knowledge of writing an accounts, or maybe the person is doing a mischief to write an accounts intensely, so this would also create a limitation of accounting and unsuitable for forecasting, as you are actually writing a financial accounts only through the financial records. You might not actually getting any financial decision, or maybe you cannot actually forecasting for the future. But for forecasting your future, you have to apply more techniques and more methods. For that, you need more skillful people to analyze these accounts. So through only writing transactions and recording transactions in the books of accounts, you will not getting all the kind of future decisions also. For that, you need a special person and skilled person to evaluate the transaction. So this is what the limitation of accounting. So, my dear friends, this is what all about bookkeeping and accountancy, and how this bookkeeping and accountancy would helping out you to understand a better way to analyze the accounts, to summarize the accounts, to interpretation of these accounts, and to take a future decisions for betterment of the business. I hope you will understand these things better way, as you can read the content also which are available with you. So, for that, thank you so much for the same. We'll meet you again very soon. Thank you.